Are you a teenager with a lot of financial responsibilities? You might feel like everything is going to be difficult for you, but the truth is that it doesn't have to be. With the right knowledge, you can take some simple steps to begin investing in your future and give yourself the best shot at success. If you're a teenager who knows that money matters now, watch this video for great advice on how to invest wisely. Investing as a teenager can be scary, but it's much easier than most people think. With the right guidance, anyone can make great decisions about their money and get ahead of their peers. In terms of savings and investments, here are 5 common mistakes teenagers make when it comes to investing their money that you should avoid. Investing based on emotions and not logic. Many young people invest in things that are close to their hearts without thinking about whether they are worth investing in. This can lead them to make the wrong decisions and lose money. Financial investment decisions should be research-based and well-informed, not emotional. Financial literacy helps balance this aspect and helps young people make rational investment decisions based on market research and trends. Making investment decisions is not easy, especially if you are young and inexperienced. However, there are some mistakes you can avoid by taking time to learn the basics of investing. You'll have a better chance at making progress with your finances when you spend based on reason, seeking quick gains. Short-term gains are beneficial, but transient. Teenagers desire to invest when they observe friends or family members generating a quick profit from an investment. However, approaching investing in this manner can be risky. Making long-term promises and following through on them should be the goal of investing. Yes, there will be instances when you can sell an investment for a rapid profit, but it shouldn't be your main objective. Finding investments that will increase in value over time and offer you future financial security should be your aim. Investments are a marathon, not a sprint, and this must be kept in mind. You should take a long-term view of it and concentrate on making wise, strategic choices, not having solid investment plan. If you want to make the most of your investment, you should have a solid investment plan in place. Having a plan makes it easier to stick to your budget and avoid spending too much money. Having a solid investment plan will also help you to make better decisions about where to put your money and when to take the time to review your options and make changes when needed. For example, if you're wondering whether you should buy stocks or not, it's always a good idea to make a plan first and then make your decision based on the information you've gathered. If you don't have a solid investment plan, you'll likely make poor decisions over the long term, and you might also miss out on some really great opportunities. It's important to take the time to make a solid investment plan and stick to it throughout your entire investment journey. No diversification. Many teenagers make the mistake of putting all of their money into just one type of investment. They have all of their money in stocks, for example, or real estate. But the truth is that you need to diversify your investments and not have everything in one basket. Having all of your money in one type of investment is risky and could leave you vulnerable if that particular asset class doesn't perform. Instead, you want to diversify your investments and have some money in a variety of different asset classes. You can do this by investing in stocks, bonds, mutual funds, and ETFs. This will help you to remain a bit more diversified and less risky. It will also help you to avoid putting all of your money into one type of investment that could be risky and lead to a bad outcome. Investing money that you can't afford to risk. Spending money you can't afford to risk can increase your emotional and stress levels, which can lead to poor investment decisions. Consider your risk tolerance when evaluating stocks, which is your willingness to lose part or all of the original investment in exchange for a high return. Evaluate which stocks or asset classes you feel comfortable with when determining your risk tolerance, such as growth stocks versus bonds. Don't invest money you can't afford to lose, such as your rent or emergency savings. Conversely, Investing money that you can afford to risk can help you make better investment decisions. Conclusion: investing as a teenager can be tough, but it doesn't have to be. You just have to be smart about how you do it. Applying investing fundamentals early can help lead to a bigger portfolio later in life. Avoid gambling and instead focus on solid companies with long-term upside. Consider what type of investor you want to be, so you know what questions you should be asking of your advisor or yourself. Finally, start investing as soon as possible to start generating more wealth for now and later in life.